Hi guys, hope you're well. Welcome back to the channel. A lot of you have been asking me to do a video regarding the 85k trade, and I was very mindful whether to do this video or not because we are in a recession technically. America's, semi-recovering, then pulling back. Oil's back up again, and the market's pulled back on Friday. So I'm mindful that people's portfolios have been hit. There may be shortages of jobs or reduced hours. I don't know how far this recession is going to go, and this is what not the video is about. And nor am I boasting. In actual fact, I made a bit of a mistake because I could have actually locked in X amount of profit and let it run because we tanked even further. So I only probably got 50% of the 100% move. So that was an error on my behalf. But like I said, these opportunities are the real opportunities where wealth is created, or your small accounts can grow fairly quickly. A 50% trade isn't to be sniffed at. If you've got £1,000 or £10,000 account, 50% of that is a lot. So I'm going to flick to the charts now, discuss what I have seen on the technicals as well as the fundamentals ever so slightly, and using logic alone. We do get fixated with looking at the charts and reading the news, but sometimes taking yourself away and taking a step back like I did in summer, I could see the charts a lot clearer, and I was using my capital and liquidity on hand, and this is where I think I set myself apart from other traders because I can scalp, and that is my main bread and butter, and I believe I'm slightly better than that than other trades. However, obviously this trade was lucrative, and I did get a decent risk to reward. However, when you are scalping with decent capital and you do see 2-3k there, and you've taken two or three trades, that can sometimes work to your disadvantage because 2k a day is a lot of money. Yes, I am using 150k capital, but it's hard not to close them. And I wouldn't say I'm semi-retired, but something similar. I do like traveling, I like my fishing, so sometimes I just scalp what I need. So yeah, we'll flick to the charts, and like I say, I'll break it all down. It is a little bit information overload on the chart, so bear with me. But hopefully you can see where this logical short in the rally came from. We're all comfortable buying dips, so if you are comfortable with that, then do the opposite at times. And when you feel that the market's overextended and that it's likely to pull back, sometimes you may have to speculate. So yes, okay, this may have been a bit of speculation, but it was backed up with technicals. So yeah, here we go. Hi guys, welcome back, hope you're well. So here we are. This is my chart breakdown, okay? This is the area that I'm concerned about here, which is obviously my trend line, which it formulated. We got the lows of the year, which again, I was in and around Marbella then. Should I have bought on that and held? Shoulda, coulda, woulda. Didn't do. However, by me not doing this meant one thing, that I had an advantage because this was trending, okay? I had summer off, but when I came back with vengeance. This was my area here. This was my supply zone marked out because we had significant selling pressure there. I wanted the same here, okay? So for argument's sake, say for example, this has sold off to date and I caught the top or thereabouts, there was roughly 12%-ish, we'll say, okay? So that's what I was interested here, and we've got the similar sort of move here. Could we come back and test the lows of here? Lows of this year? Possibly. There's an argument saying we could draw a trend line coming down now, ever so slightly, okay? But the top and bottom of it is, here is where my entry was, because we had significant selling pressure there. And again, don't want to reiterate myself, but I wasn't really privy to much of this. But I envisioned that the market could pull back, okay? That this bear market rally was overextended, given the fact with June we'd rallied and into August. There was no way in hell that we was going to have a full recovery, V-shaped recovery or otherwise, and because there'll be some more drama, whether it be Putin, oil, supply, demand, chips, economic data, rates, inflation. So we're sometimes speculating whilst we're comfortable buying the dip. And if you'd have bought that, you'd have 4 or 5 times your money on a leveraged account, possibly more. You also need to factor in this this sell-off and the likelihood of that being. So here we've sold off again. So again, this was an indication that the supply zone, this could have continued. We had a little bit of buying pressure there, only for it to actually reverse and hit our trend line once again. Obviously, we had the fundamentals regarding oil. This is pulled back once again. So we're looking for another area of buying or selling pressure. Here, we've had buying pressure in and around. I would like to get these, my eyes out the same. We'll draw it for the. So here, we'd like to see potential that we could have another reversal for a push long, another 1,500 points, recouping from this sell-off. Or are we going to see the lows of the year and even surpass these? We don't know. We can only trade what we see in terms of technicals and fundamental analysis and cross-reference them. So here, you would have liked to have seen that this demand area here, once we've reached here again, it could have proceeded to recover. It didn't. It's more selling pressure. Once again here, number 3, failed this area here, and we didn't again see a V-shaped recovery. In fact, we saw a sell-off once again. And then we've got this nice trend line here, and this is what I was privy to partially in summer, and hopes for a pullback here, respecting the supply zone here, guys. So that's the charts broken down. I won't bore you to death. A little insight to obviously 12k round number. Like I would like an obvious bounce from there. If we do, there's obviously good risk to reward. Yet we could come down to this logical area here. I mean, there's an argument saying that these areas here could act as demand areas, depending on the severity of this sell-off here. I'm not jumping in at 12 straight away or right away. I'd like to see this come down a little further to 11.5 in and around this area here, and potentially reach this zone here. Then some real significant buyers come in here. If we do start bouncing here at 12, which is our favourite round number, we could retest here. Yeah, we don't go in on the first attempt at a recovery. Wait for a retest. I mean, it could be a nasty fake, and again we could see lows or even further. So that's it all in all, guys. Hi guys, so I thought I'd do a little evaluation just to discuss what I've shown you. And the top and bottom of it is looking out for them opportunities. Everyone's comfortable at scalping, everyone's comfortable maybe placing 5-10 trades a day. But by me taking an amount of time off in summer, I came back with a massive return because I studied the market and I was seeing what the price action was telling me, cross-referencing it with the fundamentals and the news and where we are in the economic data with inflation and rates and Powell, etc. And took that speculation. It was a speculative reversal. I could see it was coming out of that trend line and I was hoping for a pullback. And once them sellers came into play and obviously the fundamentals were all aligning with some negative confluence in the market, there she goes. And we profited. Like I say, it's handy when you've got a mentor because you can follow his success or his trading methodology. Okay, I follow Warren Buffett. When I knew that Warren Buffett was buying £80 billion worth of Apple this quarter, I bought some Apple as well, and I thought Tesla typically outsmarts the market or outperforms the market at times. So I bought some Tesla. I only bought 10 grams worth of each, but I closed my Tesla at 32% profit and my Apple at 20% profit. I'll show you up here. And I don't get it right all the time, guys, but more often than not, my risk to reward is in my favour. So that 85k, I might have lost 7k, but I was 85k up. So you've got to weigh it up. I've been in business all my life. You know, me and my missus are a business couple, quite a power couple if you like. So we don't have no kids, don't have no responsibilities. Like you've seen how I live. I travel quite a bit, and you know, I do like my own time. I go fishing, I go on holiday every other month with my missus. So this isn't the norm. I do admit that. It's, you know, the biggest trade I've done. I've called out some blinding calls in my community. This one was no different. But some people don't listen, and that's fine. It's a bit like if you've got a personal trainer for the gym and you do what he says for 4 weeks, more often than not, you'll probably change your physique, your shape, your strength, whatever you're training for. But if you don't listen to him because you're having a few wines or you're having a few cheat meals and you're not getting the protein in, your carbs are all over, when that personal trainer goes to look at your physique, he knows that you've been eating chocolate and you've not been sticking to the diet, because it's the consistency, and consistency is hard. Consistency what sets certain business people against others. I'm not saying that you have to give it 100% for 4 hours a day, but what you do have to do is give it 70 to 80% 7 days a week if you want to be good at something. You know, you don't have to make yourself ill with it. If we have steak and chips every day, invariably or not, we're going to be fed up of it. But on the same token, you've got to listen to certain people. I listen to Warren Buffett. I listen to a few of the main big players. I mean, I like Michael Burry, to be honest. I mean, if he instills that much fear into the market, I'm going to follow the price action. So like I say, it's accountability above all else. Like I say, these opportunities aren't there that often, but that's when wealth is created, and the real traders can see that this sizable pullback might be on the cards. This buying a dip opportunity might be on the cards. I mean, in summer, I could have essentially bought the dip and let it run. Didn't do, but I was there for the reversal. So like I say, it's just that accountability. What else have we got? And first and foremost, that trade, it was thought out with precision that this market is overextended. If I was wrong, I would have cut the trade short, 10 grand. It would have stung, but that's what I would have done. It was never in doubt a scalp trade where I was gonna, oh right, I'm 5-10 grand. No, once I started getting in the tens of thousands of profit, I was locking it in, and it resulted in what it did. Technically, I actually cut it 50% too short, getting 50% of the move because it proceeded to sell even further off, even further. So, you know, even I was wrong in that instance. I should have maybe locked in 70k or so, let it maybe test a bit, or even added once we were tanking a little bit further. But you know, it's not easy when it's live money and it's real money. It is difficult sometimes. You know, on that Monday, I was looking at the trade. I'm thinking, shall I do this? Shall I add to it? And I thought, no, just get out. Be happy with what I've got. Take a day or two to chill and go again. And then obviously the profits, like I say, potentially reinvested. Hopefully, if the market does find another level and we go into, I mean, with the bond market being in a bit of a bear market now, I'm hoping that the stock market could get some confidence instilled back into it, depending on the rates and inflation, and see where we are in the monetary policy. And hopefully we can get some buyers back into the market and we can get another nice long push. And if we're there, I'll mention it within the on my Instagram and in my financial community. Maybe do a video, see where there's a logical buying opportunity, and potentially go there. So hope you've enjoyed the video, and we'll catch you again.